last week, Sunday, I gave some forecast signals that I said when the market opens, we can trade. If you are a regular visitor to this channel, you know that every Sunday we come your way with signals. Now, in this video, I want us to look at those signals and see the outcome and see what we can learn from these signals and then the outcome that we have. There's something very important in this video, so watch to the end. Leading Forex, we have the best that we can say the best for you. So let me take you straight to the MT4. This is our MT4. This is what we have. Now, last week, Sunday, I gave 4 signals, which were Euro USD. Euro USD, I gave a buy. And then also GBP USD, I gave a buy. And then NZD USD, I gave a buy. And then also AUD USD, I gave a buy. 4 signals. I hope you remember. So let's take them one by one. Today is Thursday. The week hasn't ended. But our profits is so much that all trades are in profit. All trades have hit TP. That is the very first thing, or the good news I should announce to you. All the trades have gotten to their TPs. You know the rule. The TP is 100 pips and the stop loss is also 100 pips. So let's take the first trade. Euro USD. This is Euro USD already on the chart and it's on 1 hour time frame. If you look at the market, it opened on Sunday. Here in Ghana, it opens on Sunday, which was here. This was the gap that the market opened with. So you can see where I'm pointing my, if I have to change this to make it blue for you to see, I think you can see this color well, right? So this was where the market opened with a gap. If you are seeing the gap well, okay, or you like the yellow back again that way, yes. So this was the gap. This is where the market opened. And then it came with a gap. And I said that when the market opens, you should wait for 2 hours, a maximum of 2 hours before you enter your trade. These were the rules I gave. 1, you wait for a maximum of 1 hour, 30 minutes or 2 hours before you enter your trade. So the market opened here with the first 1 hour, and then this was the second hour. So these were the 2 hours. If I have to zoom for you to see well, maybe let me zoom. Good. So this was it here. Look at it here. This was the first hour and this was the second hour. These were the first 2 hours candle. So you would have entered your trade at the close of the second candle, which was somewhere here. I pray you should be able to see where I'm drawing. Or better still, let me use the arrow. You would have entered your trade. Oh, sorry, not this one. I don't need this kind of arrow. Let me see if I'll get a better arrow. Okay, let's see. You would have entered on this. Good. On that candle, that is where you would have entered your trade. But even assuming you entered when the market opened, that would have been here. Okay. So you would have entered your buy over there. Okay. So your buy would have been somewhere here. Buy. That is where you would have entered your buy. So let's take our buy from this angle. So from here and see how many pips did it go against us from this angle, 2 hours down to the side here. Even this one alone, look at it. It came down only 24 pips. Look at it, 24 pips down against you and went straight into profit, 131 pips on the very first day, which was Monday. So on Monday alone, Euro USD gave us the TP. That was just on Monday. Assuming you even didn't close your trade on the Monday, up to today, Thursday, as we speak, the trade came against you up to 68 pips, assuming you even didn't take this take profit. So on Monday alone, the trade gave us the take profit. But let's just assume you didn't take this take profit. So the trade came against you up to this pips here. That is almost about 70 pips. And currently it has gone back up to about 167 pips. So even if you were still in this trade up to date, you wouldn't have lost. Your stop loss of 100 pips would have never hit. You would have been in profit, or you would have hit your 100 pips target. So this was a straight win. Just on the Monday, we got our TP. Let's take the next pair and look at it. The next pair is GBP USD, also buy. And GBP USD, the market opened here on Monday with a gap again here on Monday here. And I'm sure you can see this is where the market opened on Monday. So this is where it opened. Now with that also, let's look at it. If it opened there on Monday, let's see how many pips. If you entered on the first 1 hour candle or the second one, it would have been still this place. So let's just assume you entered on the first candle. To the upside, it went into profit 60 pips. And then came against you 118 pips. So it means that this trade hit stop loss. And then it continued up to here, up to a stop loss of 150 pips. But what happened? After that, this trade still went into profit, and it's up there around 250 pips. 250 pips. Despite hitting our stop loss, it still went all the way up to a profit of 250 pips. So one will say that if you had given this trade, this is GBP USD, a very volatile currency. So if you had given your trade maybe 200 pips stop loss, one would say, why will I do that? Why will I give my trade 200 pips stop loss? That's crazy, right? But sometimes it is possible, because that's the lessons we are going to learn very soon at the end of this video. So it still went into profit. It still went by up to 250 pips as we speak right now. Okay, let's take our next currency, which was NZD USD. NZD USD is here. And yes, that one too, the market opened with a gap on this candle here. This is where it opened with a very huge gap if you look at it. So taking the trade from that angle, taking the trade from here, this was the first candle, the second candle. You see that there was a gap. Okay, good. So assuming you took that trade on that entry, let's see what happened. You took the trade here, somewhere here. It came against you up to 62 pips, 62 pips. And then after 62 pips, it went into profit up to 182 pips, 182 pips. So this would have been a win also, right? Good. Now let's go for our fourth currency, which is AUD USD, which is here, AUD USD. We have it also here. And that one too opened with a gap. And you can see the gap here. This was where the market opened, with this gap. This is all on 1 hour, just for you to see things clearer. That's why I'm putting it on the 1 hour so that we can do it. You see the gap? So that was the gap. Okay, good. So your entry would have been somewhere here if it's on the first candle. But if it's on the second candle, which would have been somewhere here, which is much better. So you will see why I always advise that you wait for 2 hours before you enter the market. So let's even assume you entered during the first 1 hour. So this would have been your entry point. To the downside, this trade went against you up to 77 pips, against you 77 pips, and then went into profit 125 pips. So this is also another win. So you won 3 and lost 1. Even the GBP USD that you lost, it is just because this is a volatile currency. So it went so much against you before going so much in your favor. Do you understand the language? It went so much against you before going so much in your favor as a buy. But all being the same, all being equal, you lost 1 you won 3. So you had 300 pips profit, 100 pips stop, 100 pip loss. So if you subtract 100 from 300, you have 200 pips to your credit this week. Now, what are the lessons I want us to learn in this analysis by looking at this? Let's assume you don't have money, okay? Just as all of us say, we don't have money, okay? And so you want to put only $10 into your account. You don't have money, so $10 into your account. Okay, so this $10 you have in your account, you may not be able to trade much, but at least with a stop loss of 100 pips and take profit of 100 pips that we give, you cannot take 2 or 3 trades. You can only take one trade at a time. So to take one trade with just $10, you would have to go with a lot size of 0.01. With a lot size of 0.01, it means that if the trade should go against you 100 pips, you are going to lose the $10. With this lot size, 100 pips of 0.01 is going to be $10. So what can you do? Once you lose 100 pips, it means with this lot size, your $10 will be gone. And if you should win the take profit of 100 pips, you will make extra $10. So 4 signals were given. With just $10, you can place one trade. Assuming you went for the Euro USD trade, you would have gotten $10 in addition in the course of the week on your money, on your $10. So with your $10, it would have become $20. But assuming you went for the GBP USD, that would have been a loss because we won 3 and lost 1. So that would have been the loss. So it means you would have lost your whole $10. So assuming you had, let's say, $20 or $30, and you decided you want to risk that $20 or $30, then it means if you go with 0.01, this is what I want to tell you. Okay, let's assume you have just $20. So if you want to fund your account, I always advise that the minimum you should fund your account, if the account or your broker allows up to a minimum of say $10, don't just fund $10. Fund $20. If you fund your account $20 and then you went with any of these trades, just don't set stop loss, because if you have $20 in your account and you want to follow this signals that I'm giving you, there's no reason to even set a stop loss. Okay, there's no reason to set a stop loss. So with $20, just go with one trade. I repeat, if you have $20, don't set stop loss, set only take profit. Just assume that the whole $20 is your stop loss. If the trade should go against you 200 pips, you are losing the $20. Use this lot size, 0.01 with the $20. And if the trade should go against you 200 pips, it means you have lost the whole $20. But in this case, if you did that, it means that the whole of this week, the 4 trades I gave, none would have gone into loss. Because even GBP USD that went into loss, it only went against you, assuming you took the trade at that entry price. Okay, let's assume you took the trade at that entry price. So the best thing to do is just put the $20 there. Let's go for the GBP USD. Let's look at the entry. The entry was here. You would have taken your trade over here, entry here. So you have $20 in your account. You know that definitely the trend I have given you is a buy. So $20, it means unless the trade goes against you 200 pips before you lose the $20, the trade went against you 151 pips. That is $15. You never lost the whole $20. So you didn't close the trade. You just assume that you decided to throw the $20 away. Just assume that way, that you decided to throw the $20 away. So with this GBP USD, this trade never went into a loss. Although it went into a loss of 150 pips, but your account was still there because you were using a lot size of 0.01. So $150, sorry, 150 pips against you would have been just $15. So it means that your $20 is not gone. You still have $5 that is holding the trade. And then gradually the trade started retracing, going in your favor. And then boom, it went and gave you your 100 pips take profit. So your 100 pips take profit got hit. So you got extra $10 in addition to your $20. So the whole week, assume the whole week, you made $10 on your $20. So $20 and making $10 on your $20 is 50% profit. Because you had $20 and you made $10. Let's say that was the only trade you took. Okay, that was the only trade you took. It means that in the whole week, you made $10 profit on your $20. So the following week, you have $30 to go into the market. Now, the next week, you will come to my channel, which is my YouTube channel. Every Sunday, I give you the signals, the analysis. So the following Sunday, you come and then you pick one trade again from the analysis, the market review. Then that one trade, you go with the same lot size, 0.01. And then you decide that you want to risk the $20, excluding the profit. Don't use the profit. Now, this time around, you have $30. So assume that you want to set a stop loss this time around. And then your stop loss is going to be 200 pips. Okay? So setting a stop loss of 200 pips means that you are risking $20 out of your $30 with a lot size of 0.01. And then target 100 pips. Okay? Now, if you do that, I can be sure and I can tell you that by the end of the second week, you are going to get another $10 on your $30. And within 2 weeks, that would have been 100% profit. Because the first week you got $10, the second week you got $10, which is $20 profit. So now your account is no more 30. In the second week, your account balance is now $40. Are we good? Now, $40. Then we go into the next week, the third week. The third week, risk another $20. Don't risk, or better still, now that your account is $40, listen, when your account becomes $40, you are going to risk the whole $40 by placing 2 trades. So, for instance, this week, I gave 4 signals. So you are going to choose only 2 signals because the third week you have $40. Is that clear? It is assumed that the third week you have $40. So you divide the $40 into 2. $20 for one trade, another $20 for another trade. Is that okay? Good. So since I gave 4 trades, you pick 2. And then you go with the 0.01. So assuming these 4 trades I gave this week, you would have gone for maybe Euro USD. Euro USD, you give it a lot size of 0.01. And then that one will take the first $20. And then the second trade, let's assume you went for GBP USD. It will also take the second trade with 0.01, the second trade. So you have 2 trades on, no stop loss, because each trade is taking 200 pips, which is 20. So in the 4th week, before we end the 3rd week, you can be sure of the first trade giving you $10, and then the second trade also giving you $10. So that will be $20 at the end of the 3rd week. So if you add your $20 to the $40, that will be $60. Even assuming that in the 3rd week you lose 1 and even win 1, you are back to $30. But you can be sure, I want you to practice this. If you don't mind, I want you to do this as a challenge, okay? Just $20 challenge. So in the 3rd week, you are going to have $60 because $10 from the $20 here, another $10 from the $20 will give you 10, 10, 20, plus the 40, which is the 20. It means the third week, you are going to have $60. And then the final week, which is going to be the fourth week. In the fourth week, now you have $60. The $60, if you divide it into 3, you are going to get 20, 20, 20. Are we good? 20, 20, 20. So it means you can go for how many trades? You can go for 3 trades. Each trade for 20. And the same lot size, 0.01. You are not changing the lot size. I'm teaching you how to trade Forex here. You are not changing the lot size. Although the account has increased, but you are not changing the lot size. You are still using 0.01, but you are going with 3 trades. The first trade, let's assume you went for Euro USD. Maybe the fourth week, I would have given you another 4 signals. So the fourth week, you have 3 trades to take. So the first signal will take the first 20. The second signal will take the next 20. The third signal will take the next 20. So you would have 3 signals. If each of them should come out well, like the way this week all the trades came out well, you would have made 10, 10, 10 each. 10 here, 10 here, 10 here. So $30 made on $60. So $30 plus $60 is going to give you what? $90 at the end of the fourth week. So at the end of the fourth week, you have $90 from just $20. So your $20 at the beginning of the first week has turned to $90 at the end of the fourth week. Now, at the end of the fourth week, you have $90. Take out your $20, which was the investment, the money you threw away. The money you decided to throw away, now withdraw that money and put it back from where you took it. Let's even assume it was a borrowed money. In Ghana here, we have what they call quick loan and other loans, which you can take on your network. So assuming that was even a loan you took for 1 month, and then the interest you pay is just, I think, some 11% interest for the whole month. So if you are paying 11% on $20, that would be how much? I think it's $1 or 1.1, 1.1. So you'll be paying $1.1 on the $20. So let's even assume this was a borrowed money. So take out the $20 with the interest and pay it back. Now you are left with roughly how much? If you take $20, let's even assume you take $25 out because the money was a borrowed money. So 25 from 90 will give us what? The $5 is the profit or the interest on the $20 you took. So this will give you what? 5. Here is left with 8. You take out 2. You are left with what? 6. So at the end of the first month, the loan that you took, which was $20, you paid it back with an interest of $5, which is 25. And you now have your own capital of $65. Now, this capital that you have, which is $65, you don't need to work for free. So let's assume that you want to take something out of this 65, and then you enjoy that as the sweat for your work for the whole month. Whenever you pay somebody, pay yourself. You did the work, so you need to pay yourself. So take 15 out as your salary for the first month. $15 out of 65 will be left with 50. Isn't it? So the second month, you have $50 to start with. Now, with the $50 for the second month, what can you do? $50, let's assume in January, let's assume we are going to do this immediately because we have just begun the week for December, the first week of December. So let's assume you are going to do that immediately. So if you do that by the end of December, you are entering into a new year, 2023, with a capital of $50 to invest in Forex. Okay? Are you getting the catch? So this $50, the very first week in January, you are going to enter 2 trades. The 2 trades you are going to divide this into 20, 20, and then you will be left with 10. So you keep the 10 somewhere. Okay, keep the 10 somewhere. So with this one, you are going to set a stop loss of 200 pips, 200 pips. So assuming the first week turns out well, the first week we are going to get $10 here, another $10 here. And that will be what? $20. So 20 plus 60, sorry, 40 is going to be 60 plus the 10 that was left. That will be 70. So 20 plus 50 is going to give you $70 at the end of the first week in January. But we cannot be doing all this without loss. So let's assume in the month of December, we lost 1, or even we lost 2. Okay, we lost 2. So we lost 20. It doesn't matter. You are still going to earn in profit, or you lost 1. So assuming this first week in January, you lost 1 trade and you won 1. So you have only $10. 10 plus 50 is going to give you 60. So at the end of the first week in January, let's even assume you have 60. Or no, it's not going to be 60. It's going to be left with 50. Because you entered with $50 and then you lost $20. So you are left with $30. And then you made a profit of $10 on 1. So it's going to be 40 rather. So you continue with 40. And trust me, if you choose this lot size that I have, the lot size that I have given you, and then you will choose the stop loss that I have given you, I can be honest to tell you that you may not, I repeat, you may not even get a single loss. Yes, you may not get even a single loss if you go with this bigger lot size. So I want you to give yourself this challenge, okay? Beginning next week, Sunday coming, I'm going to come with new signals. So I want you to fund a $10 account. If you don't have a broker that will give you that opportunity, go to the description of this video. You see broker 1. Sign up with broker 1. The minimum deposit broker 1 will give you is $10. So you can deposit $20 into that broker 1 account. And let's start. Okay, let's start. If you like, when you do that, when you sign up through the link I have given you, send me a hi on Telegram or WhatsApp. I have already given you my contact details. If you watch other videos, you'll find my contact details. So send me a hi on Telegram. So if you are looking for my Telegram handle, it is at Kofi Dollar. The Kofi Dollar is one word. Kofi Dollar. So if you are going to search for me on Telegram, you don't add the at. You take out the at. Take it out. Just search for Kofi Dollar. Look at my face. You will see this picture. A very nice picture. You see the same face. And this at Kofi Dollar, this Kofi Dollar is just one. If you see any other thing in addition to the Kofi Dollar, it is not mine. There's no at. Only Kofi Dollar. Only Kofi Dollar. Just search for Kofi Dollar on Telegram. And you send me a hi. If you register through the link I have given you, the broker link I have given you, if you register through that broker link, send me a hi. And let me add you to a group, a challenge group, where we are going to do this together. So that by the end of this December, let's see what will be the outcome. Is that okay? So this is the lessons and the challenge I want you to try your hands on. If you are committed to do this, at least test your muscles. Test your muscles with a live account and let's see how it goes. Don't risk any huge money, just $10. Sorry, $20, just $20. Put it, register through the link at the description of this video. Put the $20 in that account. Send me a hi, let's talk. Tell me you have funded your account. And then let's begin. Let's guide you. Let's coach ourselves to see where we will end. Is that okay? You can also do this without getting in touch with me. It's fine. Okay, it's not necessary that you should get in touch with me when you do that. You can just create the account, fund the account, and then every Sunday, come to this YouTube channel, watch my video, and let's begin. Let's continue and see how it goes. Is that okay? All right. So this is the lessons I have for you as a result of this analysis that I have given you. I am sure you're going to learn something new from this analysis, and you will take a keynote which will help you or better your style of trading. Thank you for watching. I'll see you again with other information that I think will do you a lot of good in the course of trading Forex. So I'll see you again. Thank you.